Greetings, sir. I am Sai Keerthi. I have selected HDFC Bank for company review session. HDFC. Why HDFC? HDFC is one of the leading private sector banks in India. Its market capitalization is about 6,51,518.11 crores. Coming to the profile of the company, it is Housing Development Finance Corporation Bank Limited, registered office, DFC Bank House, Senapati Bapat Marg, Lower Parel, Mumbai. Type Public Industry Financial Services, founded August 1994. It was almost about 26 years ago. Headquarters Mumbai, Maharashtra. Coming to the history and the branches, HDFC was founded by Mr. Hasmukh Bhai Parekh in the year 1977, but it was incorporated in the year 1994. It is one of the private sector bank where it got the permission from the RBI to set up a first private sector bank after liberalization in 1994. Its IPO started in the year 1995. It is promoted by the HDFC parent company. Branches. HDFC is a bank where it is meeting its customers at almost with its real time, like through net banking, mobile banking, SMS banking. But at most, it has a network of 5,430 branches across 2,848 cities. The most of the banks are linked through online, so it meets the customers with their needs. Coming to the promoters, HDFC is a bank where the board of directors are distinguished by with the various public policy, administrative, etc. Coming to the promoters, Mrs. Shyamala Gopinathan, chairperson. Shashidhar Jagadishan is a chief executive officer who has been recently given as CEO. On October 27, 2020. Kaizad Barucha, Executive Director. Srikant Nadamuni, Non-Executive Director. Coming to the significant achievements, HDFC Bank ranked India's most valuable brand for the 7th consecutive year. The best bank in India by Euromoney Awards for Excellence. HDFC certified as a great place to work for 2020. HDFC Bank adjudged Best Domestic Bank in India. Coming to the 2019 achievements of the HDFC Bank are as follows. It was given as a best bank in the new private sector by the FE Best Bank Awards. Winner in innovation and inclusiveness in private sector lending in the 11th Inclusive Finance India Awards. Ranked first in 2019 by Brand Z, the top 75 most valuable Indian brands. HDFC Bank was featured for the 6th consecutive year. Among the most honored list, Institutional Investor, All Asia Executive 2019 survey. Coming to the business segments, basically the business segments of the HDFC Bank are divided into three: wholesale banking, treasury, and retail banking. The wholesale banking is a place where it meets almost the blue chip manufacturing companies, less and not the small and medium sized companies as well. It has the HDFC Bank has focused in such a way that it tried to improve the capital and uh, try to improve the capital of the bank by providing various loans and securities to the blue chip manufactured companies. The treasury, basically the treasury is divided into three: foreign and derivatives, debt and money securities, and third one is the equity. Treasury is a type of business segment where the HDFC Bank meets the persons where they want to save their money and need their advice. So this type of business segment is taken up by the HDFC Bank. The other one is the retail bank. The coming to the retail bank, it is generally a customer-oriented banking where it meets the customers through all these ATMs, credit cards, debit cards, through all the personal loans, etc. And HDFC also provides. It has a product line of almost personal. It has a product line of mortgage loan, investment banking, private equity, etc. as follows. Customer segmentation. Customer segmentation is I have done it in three segmentation. In that, demographic, psychographic. The next one is in targeting, and the other third one is the positioning. In segmentation, the demographic variables such as location, it depends upon the people where they stay, and the divisional cities. Occupation, it focuses on the persons who are business persons or the salaried persons. Age, senior citizens, the psychographic variables. Uh, depends upon the lifestyle. HDFC is known for its innovation in technology, and it depends upon the people. It focuses on the people who are into the modern banking with higher set of services. Targeting this segment is mostly targeted for the corporate capitals and the retail investors. For the coming to the capital. It has targeted the people who are looking for the long term, and the retail who are the retail are for those investors like general customers. The HDFC positioning. The HDFC Bank has itself positioned with its higher standards of service through product innovation, by diversification, by diverse need of individuals and corporate clients. The next one, market share and the competitors. Coming to the competitors of the HDFC Bank, the ICICI Bank, Axis Bank, Bank of Baroda, Punjab National Bank, and IndusLand Bank. Market share of HDFC Bank. The HDFC Bank stands second in the market share with a 24.13% of its market share. The first is the SBI with 25.50%. That coming to the analysis part, Michael Porter 5 force analysis. This analysis consists of 5 variables: threat of new entrants, bargaining power of suppliers, bargaining power of buyers, threat from substitute products, rivalry among the existing players, threat of new entrants. In this, the HDFC Bank uh, have tried to innovate its products in such a way that uh, the new entrant can't capture the customers, and gives a reason for the old customers to stay with the HDFC Bank. Continuous innovation is a main target by the HDFC Bank in the case of threat of new entrants. Bargaining power of suppliers. HDFC tried to build its efficient supply chain with multiple suppliers, and it also designed its product in such a way that uh, it has put its suppliers at a place. The next one is bargaining power of buyers. Uh, uh, Basically, the HDFC have tried to build such a large base of customers. This also helps in two ways. First of all, it will reduce the bargaining power of the buyers. Plus, it will provide an opportunity to the firm to streamline its sales and production process. Likewise, it has designed some different kinds of products. Uh, Threat from substitute products. Threat from by HDFC have gone in this way, like it not only been a service oriented, it has been a service oriented rather than just being a product oriented. It has differentiated itself from the different banks by providing the unique products, rivalry among the existing players, by building a sustainable differentiation. HDFC Bank have created its own dimension that it have differentiated from the other banks. Coming to the pestle analysis. Pestle analysis is of political factors, economical, social factors, technological, environmental, and legal. Political factors. Generally in India, a lot of political factors affects the organizations like banks. Generally, it after every 5 years, there is a new government in the country with a new kind of policies. It affects the banks. Like for example, uh, the government tried to reduce the rate of interest in the case of the farmer loans, but the amount of loss is on the bank. Also, this kind of political effect does on the HDFC bank. Economical, economic policies, different kind of economic policies given by the government affect the bank. Social factors. Likewise, with the increase in the technology and innovation in its products, HDFC have grown into the different stage of technology. But at the places of a very poor education level, and the people accepting such businesses like and trusting the bank for their for the investment or savings differs from area to area. Uh, Coming to the technological factors, banks are all about technology. HDFC strives continuously to deliver the customer with the convenience incorporate latest technologies. Like all these online banking have been provided, and innovation in its technologies have been always has always been there. And coming to the environmental factors, by incorporating the technology, the HDFC is consuming paper through mobile and online banking. This tells that how they are contributing towards the environment with a different methodology. Uh, Legal factors. Being a bank, by being a bank, there are many regulations and legal regulations to a bank. It has to follow the guidelines of the RBI. So some of these are the factors affected by the HDFC Bank. Uh, Significant developments in the recent past, important factors that affected performance in the recent years. DFC Bank says advances aggregated to about 10.37 trillion rupees as of September. India's HDFC Bank says December quarter net profit at 74.16 billion rupees. HDFC Bank proposes to raise funds up to 500 billion rupees. HDFC Bank to subscribe to 37,993 shares issued by the CSC e-governance service. There was a change. The another important factor is there was a change in the managing director. Mr. Aditya Puri, who was retired in October recently, on Shashidhar Jagadishan was a recent change in the HDFC Bank organization. He is the new managing director of the bank. Coming to some financial ratios for the last 5 years. First one is the debt equity ratio. Debt equity ratio generally it gives about the complete long-term equity and debt of the company. As we can see, there is a decline in the debt equity ratio of the company. It generally have to be greater than 2. It is about 0.6 for this bank. Coming to the net profits, as we can see, for the last 5 years, from 15-16 to 19-20, there have been a constant growth in the net profit by the HDFC Bank. Current ratio equal to it is generally current assets divided by the current liabilities. Here the current ratio is almost about 0.34. Current ratio shows us that how much the bank is able to meet its liquidity. Price earning ratio. The price we can see that the price earning ratio is about 21%. It's about 21% in the 1920. it shows that the investors, if the price earning ratio is about 25%, the investors will have highly expectations from the organization than the market. uh, Coming to the return on equity, we have a decline in the return on equity from 15-16 to 19-20. Earning per share, uh, earning per share, it is about an increasing, it is an increasing trend for the last 5 years from 15-16 to 19-20. HDFC plans for future. HDFC is planning to team up with the SBI, uh, with SBI and Bank of Baroda for NUE payments entity. DFC declared their plans to raise as much as 140 billion rupees through the sale of shares or bonds. It also wants to have adequate capital in place to expand its lending business. Thank you.